House to Home, presented by Remax Diamond Realty.
Let us be the first one to wish you happy holidays. Liz is in Anaheim, so Liz is visiting her very good friend Mickey Mouse, and Gina is here just holding down the fort over there at Remax Diamond Realty. I am merely Jason Salas over here at the Harmon Studios. But ladies, it is the shopping season. Of course, Black Friday is the biggest retail day. So shopping is on everybody's mind given the holiday season. But Gina, you kind of broached the topic a little bit. Shopping is kind of also the thing to do these days if you're looking for mortgage options, because with the rising interest rate, everybody's looking to save a few bucks.
Yeah, absolutely. And I just, if we're going to start off the holiday season, I want to say, and I want to encourage everybody, it's Merry Christmas. And I'm going to encourage everyone to say Merry Christmas. Yes, it's Happy Holidays, but bottom line, it's Merry Christmas and Happy New Year. And I'm going to encourage that from now on. So let's be mindful that it is a Merry Christmas. And how do you have a Merry Christmas this season with the rising interest rates? Well,
great segue, by the way.
Yeah, I mean, we've really been encouraging people, and Liz and I are constantly shopping around for what type of loans are out there these days that we can, tell our buyers about. And I'm finding that the popular ticket right now is going with adjustable rate mortgages. The lenders are not all created equal when it comes to what they're offering in terms of an adjustable rate mortgage. And some of you out there might be thinking, well, I'd rather get a fixed. I understand that. We get it. We know that, with the interest rates, a lot of customers are looking for, stability. You want your payment to be the same. But unfortunately, with the rising interest rates, it may not be the best way to save money right now. The lenders are offering not much lower, but a lower price point for adjustable rate mortgages. And they're offering 1-year adjustable, 5-year adjustable, 7-year adjustable, and in some cases, 10-year adjustable rates. And we're noticing that the adjustable rates are lower than what you could get on a fixed rate, even with the RD loan and the VA loan. So that's what we're encouraging you to do. Go shop around, not just for the holidays, but for your interest rate, and see what the lenders can offer you, because you will save money looking at adjustable rate mortgages.
Okay, Liz, let me ask you now. So since we're using the motif or the metaphor of holiday shopping, when I go to a potential lender, like a bank, a credit union, what have you, a dedicated mortgage company, what should be the criteria that I, like go outside and I see their big posters and everything like that? What things should stand out to me, and what should I really take into consideration?
I think what you should do is ask them, what are they offering in terms of, as Ginny put it, the adjustable rates and the terms. So we've had a number of our buyers obtain a 10-year adjustable rate, which is fixed for the 10-year period. And the reason being, yes, it could save you $1,000 to $1,500 on your monthly payment if you take one of these lower adjustable rates. And the objective is to get one of these rates until such time the interest rates dropped. And then when it does drop, then you can go in and refinance your property at a lower interest rate. That happened quite a bit when the interest rates dropped. We were getting 5%, 6% interest rates at one time. And then when the interest rates dropped to 2.5 to 3%, the banks were all busy processing these loans because people were refinancing to get a better monthly payment. So the same thing is applicable with this, is get an adjustable rate, especially when you're ready to buy your home. And then when the time comes, when the rates drop, you can jump on in and make the change. But in terms of looking at your bank, yes, look at what are they offering, what are their interest rates. And sometimes they offer a special. You do want to shop at each bank because they're not all created equal, and they all have different programs that they offer. I mean,
they're packaging themselves in different ways to appeal to you. And we talk about this all the time on this show. Banks are not the enemy. It's not a shakedown. I mean, you have to have your credit score in order and you want to have your finances in good shape, but they are here to help you.
That's right, and be prepared. You, if you're going to go into your loan, get your loan, you should have your finances in order. Your, your W-2 form, your what is it? Your last 2 years tax return, your employment verification. There's a number of documentation they'll need. So when you go in, you want to be prepared to have all your documentation in order so that it's a quick pre-qualification process. And just bear in mind too, when you do get your loan, there's the appraisal process. You've got your paperwork, you've got your appraisal process, and then the bank also has their process. So we put in offers that would take 60 days for that processing. So again, you want to be in time for the holidays. Now is the time.
Okay, Gina, let me ask you now, because I'm a reporter, so I'm skeptical about every single thing, right? The running gag is, if your mother tells you she loves you, it's like, make sure you check that out and corroborate that first, right? Which is a crazy running gag for reporters. But what is the risk? Because of course, as a business person, you always say there is a certain amount of risk and everything. So how should we, temper what might be like a really good opportunity or a really good marketing approach with what's best for me and my finances?
Well, the risk that I see is if you know you want to get into a place sooner rather than later, the risk that I'm, explaining to buyers is the interest rates have continued to go up. I know with last week's meeting with the feds, we were expecting another hike and they put a pause to that. People are expecting the interest rates to come back down, but that's not what we're seeing. That's not the writing on the wall that we are hearing from lenders. What we're hearing from lenders is expected to go back up. They believe the pause is just for the holiday season,
right.
and partly because it's been going up so fast in such a short amount of time. Heads are spinning. The market is being affected and responding to these rate hikes in a negative way. And so, the talk out there with the lenders is, we believe they're pausing it, but for a short term. After the holidays, maybe January, February, probably more January, they're going to continue on that, that with the rate hikes because they're trying to reduce inflation by making it more expensive for people to spend money, to borrow money. They're hoping that will stop people from buying. And by stopping people from buying, it will slow down inflation. I don't know that that's necessarily true. And especially here in Guam, we're kind of in a catch-22 because we don't really have enough housing. And the housing that we do have, the price point that they're in based on our costs are rather high. So I'm telling people, listen, if you're looking at buying, do it right now, because I do expect that the interest rate's going to go up again in January. So if the interest rate goes up again in January, your buying power goes down. And how does this affect sellers? Well, if a buyer's buying power goes down and you really need to sell or want to sell your home, you're going to have to follow that number in order to get your property sold. So if you're looking to sell, perhaps this is the right time. Either that or you just wait it out and see what happens after after the presidential election. Let's see who gets in office. Let's see what their outlook is on the economy. But that's a long
recession right now. I don't know who started that rumor that said the recession was just like a thing that they said, okay, a bunch of tech companies laid off, thousands of people, and then it was all done. I mean, we're still hurting right now nationally.
We're the United States of America has redefined almost everything. So recession has been redefined. And so that's why people say we're not in a recession. Depends on your definition. And as I said, they're redefining everything. So things just, aren't the same, but we feel it in our pocketbook. We all do.
Okay. Final question, ladies, and I'll throw this out to both of you because Liz, you were talking about refinancing. And of course, that's always an option. And that's a very smart route to pursue. In your experience, 60 years of real estate experience between the both of you right here on Guam. You guys know the market. You guys know, the major players and the lay of the land. What is the soonest after actually acquiring like a loan for a mortgage that you've seen a customer then refinance it? Because I know some people said, oh, I've only had my mortgage for, 2 years, 3 years, 4 years. It's too early, or I'm not in that position. Like, how fast do you actually see someone take advantage of the ability to refinance?
Well, from what I've seen, could be ranged from 3 to 5 years. They could have had their loan for 10 years, but it's like you hang on to that loan for until you start to see the change in the interest rates. I mean, I'm here at the National Association of Realtors convention here in Anaheim, and we have our economists talking about, how the market is changing and what people are doing. So we're continuously getting updates to help our consumers find the best route to take. But in terms of when they do refinance, is they keep their eye on the market. I mean, I myself had my mortgage at 5.8%. And I had it for like 10 years. And when we were able to get 2.5%, I jumped on the bandwagon, got that done. So people have to be vigilant to see what is being offered by the banks and, how much of a drop in the interest rate. And, don't hesitate. You got to get to it before there's any change in the interest rate.
Now, Gina, if I can just add, my parents actually refinanced their house a long time ago, but I mean, they'd had their mortgage for about 25 years at that point. And the only reason they did that is because my sister went off to college. So they did that as a means of, of financial consolidation. They actually told me afterwards, had we known that that was a better option that we absolutely could have taken and then saved ourselves, we would have gone that route.
Well, there's a rule of thumb to refinancing. First, if the interest rate has gone down by a minimum of 2%,
that trigger.
You should calculate what you're going to save in monthly mortgage payment against what they're charging you. Because remember, we use the word refinance, but what we need to be considerate of is that no lender ever gives you money without charging you for it. So depending on the cost, you calculate what you're saving into what you're paying to save. And then you take a look at that. How long is it going to take me to pay it off? And then you can pretty much figure out if that's a great deal for you or not. And not only that, sometimes people look at the number that amount that they're saving, and they readjust the number of years on their mortgage payment because now they could pay it off a lot sooner. And so there's various factors. And if you want, now we're not going to be talking about refinancing for an awfully long time because the interest rates are going in the opposite direction. So that conversation is probably not going to hit us for a few years. But when you're ready to take a look at it, feel free to call me and Liz, and we'll help you make a better decision about it.
Maybe the layman's way to express that concept would be like, when the interest rate goes down, your ear should go up, just like a dog. Pay attention. Apprise yourself of those interest rates falling and everything, because that's time for opportunity.
Yeah, that's opportunity.
Okay, and before we go, ladies, I just want to say, of course, happy birthday to the 248th birthday to our friends in the United States Marine Corps. I actually did a story on that. And ladies, I shout out to our friend Alex. He's a U.S. Marine. He actually came up to me and said, I watch the show every single week. He's moved to Guam. He wants to consult you guys for advice on property. He really, really loves Guam, and he really, really loves our show. But he says he watches every week, and he actually, and Alex, the serviceman, actually told me, a U.S. Marine, told me he really liked that episode when we talked about St. Joseph and how you guys actually use St. Joseph to bless your property.
Oh yeah, it's true.
You still got the statue, Gina?
Yes, I do.
There you go.
Actually, Jason, I used it to bless someone's house recently.
You invoke the blessing of San Jose.
Just for a blessing. We're not selling, but I wanted them to have good luck.
Very nice.
Yeah.
Well, there you go. So Alex, we salute you, sir, and we thank you for your service. And thank you, ladies, for everything.
Thank you.
House to Home, presented by RE/MAX Diamond Realty.